Good day. It is our pleasure to share our study, the correlation between the newest personal income taxation and workers' annual income under the tax reform for acceleration and inclusion law. In this Asian virtual conference, a multidisciplinary research. We are from the cluster 4B, accountancy and other business disciplines, and the presenter will be myself, Marnelia Fauni.
I'm Angela Kate Sida Luway.
And I'm Christian Andre Narito, with Mayor Angeline Javier, Christian Leonzon, King David Ostan, and Alex Matthew Reyes as co-authors from the ABM Senior High School Department of Emilio Aguinaldo College, Cavite. Good day once again.
National taxes are the most important source of government revenue, and those imposed by the national government that charge the income of individuals to fund public programs. The personal income tax is used primarily for income generation and redistribution for public services. As a result of the implementation of tax reform for acceleration and inclusion, taxes imposed on individuals are reduced and the tax system simplified. Moreover, other study focuses more on the effectiveness of this law. Nisbong Hanoi, Ecoban, Bueno, Medio, Kapunin Kapuyan 2019 have stated these results are still not evident on the Philippines as it was still its first package and people don't perceive any improvement in the government services. Nonetheless, further factors under this legislation still need to be studied, which is why we come up with a study entitled The Correlation Between the Newest Personal Income Taxation and Workers' Annual Income under the Tax Reform for Acceleration and Inclusion Law. In this study aims to know the interrelatedness between the two variables, as well as to determine whether an increase or decrease of a variable is related to the increase or decrease in the other. Furthermore, the researchers want to address as follows. First, is there any relationship between the newest personal income taxation and workers' annual income? And what is the level of relationship between the newest personal income taxation and workers' annual income? Once again, our topic is all about the correlation between the newest personal income taxation and workers' annual income under the tax reform for acceleration and inclusion law. With his book entitled Wealth of Nations, Adam Smith attempted to systematize the rules that should govern a rational system of taxation. The first maxim, which is the ability to pay theory, requires the total tax burden among individuals according to their ability and capacity to bear it. With this, an individual with higher income shall pay more taxes than the lower income, since they have more ability to pay more taxes. This theory serves as a foundation of this study, as it seeks to know the interrelatedness between the two variables and the reform of the Philippines income tax is in line with this theory.
So here's the blueprint of our research. This study is governed by the ability to pay theory by Adam Smith that is connected to the phenomenon which is train law. This law aims to create a fair tax system for all by decreasing the tax rates that the people should pay to the government. Moreover, the researchers want to know if there is any relationship between the new income taxation and workers' annual income and reckon their degree of interrelatedness. That is why they are interconnected by these lines.
Moving on to the materials and methods for this study, the researchers used correlational research design, which is according to Kalya in 2011, seeks to determine how two variables are associated without focusing on their cause and effects. In addition, snowball sampling technique is employed in this study as the researchers are not allowed to go beyond the campus. In this case, the respondents were also involved in gathering other individuals who would be helpful for the study. This was achieved through the selection of 100 workers in Dasmariñas City, Cavite having an annual income of or below 250,000 pesos. The researchers then conducted a survey wherein questionnaire, a tool used to gather data through a series of questions with an informed consent form, were given to the respondents of the study. The researchers created their own set of questions that were tested for validity and reliability with the Fleece-Kappa coefficient. Newest income taxation got 0.629872, while the annual income of workers got 0.701393, both showing substantial agreement. In other words, the researchers were able to present the state of knowledge of the respondents regarding the phenomena. Lastly, Pearson's correlation coefficient, a type of test statistics measuring relationship between two variables that can have a value of between -1 and 1 was employed in this study as the researchers wanted to know the strength of relationship between the newest personal income taxation and the annual income of workers.
For the results and discussion, here is the presentation of data. Table 1 is about the interrelatedness between the new income taxation and workers' annual income. The coefficient R shows a value of 0.72, stating a strong positive linear relationship. Though Bernzold stated on 2005 that income tax does not directly change the lifestyle of individuals, still, the researchers are ascertain that the variables being studied are linked to each other. Also, train implementation lessened the income tax rates of 99% of the workers, that is according to Bonganen and others on 2019. Hence, the changes on the annual salaries received by the employees are directly related to the improvement of our tax system. On the other hand, shown in Figure 2 is the linear relationship between the two variables. Linear regression is a statistical model that is used to show or predict the relationship between two variables or factors. We can see that the data points on this graph are close to one another, suggesting a strong positive linear relationship, which means that if one variable increases, the other one increases as well. So if a person's annual income increases, the same will happen to his or her income tax. Department of Finance stated on 2017 that after train law, those whose salary falls under 250,000 pesos are exempted from paying income tax, while those whose salary falls more than will have to pay lower taxes than before. Meanwhile, study of Bongan and others stated that the train can worsen the living situation of different individuals. But still, the changes on the annual income received by the workers after the law took effect states that the variables are related to each other in a strong positive way.
As stated by the Department of Finance, approximately 28% or 2 million Filipinos having an annual income of 250,000 pesos and below are now exempted from paying personal income tax, while the remaining workers will have to pay lower tax rates after the adjustments made in the personal income taxation under the train law. This supports the conclusion of this study that the newest personal income taxation and the workers' annual income are directly correlated with each other, and also the level of interrelatedness between the two variables of the study falls under the strong positive linear relationship.
The researchers recommend that working individuals study other changes to train law. Did the government conduct an in-depth research for the improvement of tax system in the Philippines? That Emilio Aguinaldo College used this research as a learning material for the student to understand more about the relationship between the new taxation and individual salary, and for the future researchers to use this as a reference and conduct this research in other large urban areas where they can broaden the scope and consider adding additional variables.
So here are the link of the references that the researchers used through the whole conduct of the study.
Once again, we are from the Cluster 4B, Accountancy and Other Business Disciplines. I'm Marnelia Fauni.
And I'm Christian Andre Narito.
And I'm Angela Kate C. Daluway, presenting our study entitled The Correlation Between the Newest Personal Income Taxation and Workers' Annual Income under the Tax Reform for Acceleration and Inclusion Law. Thank you.